Hi, let's cover my Elliott Wave analysis on Bitcoin on the weekly, daily, and the 15-minute time frame. On the weekly time frame, the probabilities remain higher for the bulls, where this range locally is labeled as a wave 4, and we're still looking for a wave 5 towards the upside. Wave 5 should be internally a 5-wave impulsive structure, and once finished, we're looking for price to move back down. For a bear market, we really at least need to see a 5-wave structure to the downside as a minimum, 1, 2, 3, 4, 5, followed then by a 3-wave corrective structure to the upside. Once you get a 3-wave corrective structure, it at least opens the possibility of a bear market, while the bulls are going to be looking for a larger sideways WXY. At the moment, we do not have a 5-wave move down, and nor do we have a 3-wave corrective structure to the upside. Therefore, the bullish scenario has higher probabilities on a weekly time frame. Now here on the daily, there is 2 scenarios that I am tracking, either a flat or WXY. So the flat is here wave A, wave B, and then wave C. Wave C internally should be a 5-wave structure. 1, 2, 3, 4, 5. You're looking for at least one more low. It is possible to maybe get a multi 1, 2 in here, and therefore you're looking for a couple of wave 4s and 5s, but quite simply, you as a minimum want to see a wave 4 and one more wave 5. And then depending on price bouncing up, if you get another range in the wave 4, okay, cool, we'll be able to identify this, and then we'll look for another wave 5. And then you get a multi 1, 2, the 3, multi 4, 5, and eventually you do move back towards the upside. The invalidation here on my chart is 120.6K, which would mean that wave 1 and 4 overlap, which is not allowed. However, even, if price is moving to the upside and goes all the way to this low here at 119.7, you're not really looking at a wave C to the downside anymore in an impulse, because it would be incredibly high for wave 4 to retrace all the way to that level. Generally, one would use the 0.618 Fibonacci taken from the highest pivot in wave 2 to a low of 3. So you toggle on the 618, and the 618 acts as an invalidation for wave 4. However, because of the volatility here with this move down, some charts have wicked to like 102, 100, maybe even lower. And of course, if I drag this down to say 100 or even 102, you can see that price moved up and touched the 618. So therefore, in this particular case, the 618 is not very reliable to invalidate a wave 4. Yeah, I keep an eye on it on my Coinbase chart, and I use the Coinbase chart for good reason, because based on my probabilities between different charts, Coinbase is one of the best charts to count Elliott waves because of the candles, the wicks, and so I look at Coinbase, I analyze on Coinbase, but because of the differences with other charts, I just don't like using the 618, and therefore the invalidation for a bearish outcome being a 5-wave impulse to the downside in this case would for me quite simply be move back to this range. That is something that I would like to see. So if price can do this, move to the range, good for the bulls. This is going to be a higher probability 3-wave structure to the downside, and not a 5-wave motive wave, which again puts then the probabilities in the bullish basket. Now, if we then go to the WXY, here you want price to move to the upside, so you actually don't want price to take out this low. Instead, you're looking for a continuation of the range, maybe another flat here, but by all means, you just want price to move up. I don't expect price to move up and break this range that we have here at about 121 in one go. I would expect at least a bit of resistance and a bit of a retracement. In this particular scenario, you're looking for a wave Y, either a triangle, A, B, C, D, E, continue the range and up afterwards, or it's the flat scenario. Not sure how I really feel about the flat scenario after we have everything like in the drop here, but still the flat scenario, the wave B here, it's definitely still on. So you would have A, B, and then a wave C. Or a WX and then a wave Y internally. So you need a zigzag structure to the upside here. So maybe 1, 2, 1, 2, 3, get a 4, 5, 4, 5. That's your wave A, get a retracement B, then a C up, get your B in, and then get another move towards the downside, which from a psychology point of view would be quite a thing, because of course C's generally are very quick and scary, like what you have here, but then get an additional 4, 5, which we may get, and then eventually you turn around and you go towards the upside, so definitely interesting, keeping an eye on this. Now the WXY, if you're like, wait, this might look familiar, you're actually not wrong, because in over here, 2024, when price printed this range, there were two things here in this range that we kept an eye on. We had the ABC finished at the low, or the WX and then wave Y finished at the, well, not finished at the low, but the low was then the low of your wave A of a triangle, and then you get B, C, D, and E, which was definitely something that we were keeping an eye on. But at that moment in time, preferably, that was your low. So this was your C, or this was your wave A, and we were looking for price to move towards the upside. And there is a video on my channel, which I really recommend, where I analyze that range in great detail, and it is this one over here. So it's an old live stream, it's 3 hours in length, but in that video, I basically analyzed this range in detail just after this low was formed, and I explained why the probabilities were higher for price to move up and why we were looking for either ABC or the WX and the wave Y. So yeah, we'll see what price does here. On a daily time frame, I gotta say, I'm just very patient, letting the dust settle, because over here at the moment on a daily time frame, there's not really a great opportunity, as one kind of like waits for dust to settle, for this range to provide some sort of clarity. Do we move up inside this range, or do we take out the low first? Like, that's basically the difference. And if price is gonna move towards the upside, I don't expect it to break immediately. I would expect like a retracement bit of resistance, which then also gives the opportunity to long opportunities, right, based on areas of support that we then have. And if price is moving to the downside, well, then I expect price to move down on lower volume and then eventually turn around. So then areas of support become interesting as price is slowing down after this high volume move to the downside. So the opportunities are quite clear. It's just that where price is here on this particular time frame, it's not very interesting. But then on a 15-minute time frame, things are actually like getting interesting now as we get some more information. So initially, price over here created a low, big wick, and then started doing all of this. And at that moment in time, I think also in my previous video, I said, I'm not interested in engaging with this. Like, it's messy. It's just not worth my time to try and focus on it. However, as more information comes in, eventually you get a bit of a clear idea of what's happening. And then price was over here, and I was like, okay, Sunday, right, afternoon, I can now analyze this bit as I looked at the chart and I got some ideas. So first of all, I was looking here for the bullish scenario in probabilities as well. So you have your A or 1, your spike to the upside, followed then by B or 2, and you're looking for price to move towards the upside again to at least take out this high at 114.8. Inside B2, we then have a WXY over here, so ABC in a W, X, and then ABC in a wave Y, and you look for price to move towards the upside. Of course, there were some other scenarios as well, but in the lead, I explained why I am not a big fan of these. This is also an ABC, but you would expect another low. Lower probabilities. Why? Reason why, the size of this wave B here. So you have a larger WXY circled, WX, but then your wave Y is A, B, C. Like, all of that is a wave B, which is very long compared to the short wave A here. And preferably your wave C would be finished here and you actually start moving to the downside. So once price pumped up and took out this high, you know, it lowers probabilities even more. Triangle was an idea as well. However, in this case, you would need a WXY structure in B, which by itself is rare, as most commonly a complex structure appears in C, not B. So this hurts the probabilities for a triangle. And then finally, the bear scenario was a W over here, then a wave X and Y. Of course, X is very long to W, but it's the same with an A1 or a B2 over here in the bullish case, right? So that doesn't matter. It's the same here. So we can, like, you know, that's this, it doesn't matter between bull and bear, but also here you preferably don't take out that high anymore with a flat in that your wave Y. So then price here started moving to the upside on increasing volume, which therefore made it interesting to look for at least this high at 115 arguably, and also the 45-minute order block that I had on my chart as an area of resistance. And once price broke out here, I participated in a move, closed over here because of the order block. Haven't been engaged with the market since, as I'm just waiting for some new stuff. Now, talking about new stuff and new ideas, There's currently this one here that I'm tracking being a flat or an impulse to the downside on the 15 minutes. So price touched the order block, move towards the downside. Now the probabilities of this move here down, the first structure, are higher for it to be a corrective structure, not an like motive structure. I'll explain in a sec. So the motive scenario is one. This over here is then going to be a wave B or a wave X, this low, right? And then an A, B, and then C. Yeah, you get your W, get your X, and then A, B, C, and a Y. So WXY in a wave 2. However, the 1.618 for a wave B or an X is not a common target. It is a rare target. And for some, it's an invalidation for a B or an X because it is so deep. So it hurts the probabilities for an impulse to the downside, but it's not an invalidation. Same with the 886 here, touched for wave 2. But in the arguably bullish scenario, where we have this flat, you count this as a 3-wave structure to the downside, touch the 1.618. We have an internal WXY double zigzag in your wave B, and then you look for an impulse down. So 1, 2, 1, 2, you get your 3. Arguably, that's your first 4. You get another leg down. You get the second 4. You look for another leg to the downside to finish your wave C. And after wave C, you would like to see a bit of a bigger move back towards the upside, which can result in W, X, and the wave Y. Right? For example, like a larger sideways structure, which, by the way, wouldn't necessarily be bullish unless we can move all the way up here, but a WXY is an idea, maybe some multi-1-2s going on. We'll just have to observe the bounce to the upside, right? We just have to look and wait. But in this particular case, you would look for a structure to finish. And we do have some support to the downside over here, which is interesting for the end of a potential C, or maybe wick at least below and then eventually move up. We have a little bit of liquidity here as well, still a couple of lows. So it's a bit of an interesting area to consider the end of a wave C in this scenario, and then wave A, wave B, wave C. Wave B touched the 0.9, minimum target for a flat. You get your C to the downside, and preferably now it's also moving down on decreasing volume. Right, you get your 4s and your 5s, preferably on decreasing volume into an area of support. It's at least interesting to see what price does as it touches this particular area. And then you look for price to move towards the upside, and we'll see what the move up is. Is it going to be corrective? Is it going to be motive? Like, we'll wait and see to adjust the plans. Now, with regards to a more bearish outcome, this would basically mean, cool, we have a finished structure here to the upside, and now we are looking for moves down again. So here we then have your wave 1, WXY and 2. I already explained the 1.6 and the 886. And then this leg down is the same as your wave C. It's basically either 3 or wave C. Exactly the same, but after wave C, you would expect a bigger move to the upside, like probably move back inside this range as a minimum, possibly take out the highs. Again, depends on the structure. While in a bearish outcome, you definitely don't want to move back in the range. You're looking for a 4 and another 5, and this wave 4 is preferably similar in size compared to your wave 2. Now, this is very hypothetical estimation, if the low would be created for wave 3 at around like 2:45 to 3 p.m. Central European time, which is basically after the New York session is opening. So I kept that in mind, like, hey, if New York maybe in the early hours is going to print a low on the chart, maybe somewhere there, then preferably your wave 4 is going to end at least after the 15th of October, 6 a.m. Central European time. And it can, of course, be longer, but preferably wave 4 is at least similar in size. And then you get a 5 to the downside. So it's fine for wave 4 to finish like somewhere in this box over here around that vertical line and then go down in a 5. So that's the difference. Here, you're still looking for another 4 and another 5 to the downside, where you want to have definitely a bit of a longer range in a 4 compared to 2, while in your bullish case, you're looking for shorter wave 4s here, right? Shorter 4, one more move down. This is then a 3 in the bearish scenario, while it's a C in this case. And then you look for a bit of a larger move towards the upside, and we'll see what it is. But this is basically what I'm looking for locally as we now get more information that we can play with. And then we have the levels. So order blocks. I actually have 2 order blocks on my chart. So the 4 to 5 minute order block is now touched. And I also have a 2-day order block here on my charts. I can go to the 2-day chart here and you can see the order block. I took it from the low of the candle to the upper side of the body. The low of the candle can also be, of course, like you could arguably say that is the top of the gap that we have here. So, just an area of resistance. So those are the order blocks. But then with regards to the levels, here we have the volume levels on my chart, favorite levels. Then we have the time frame horizontal levels, and then of course the order blocks. And if I just turn everything on, this is here what it looks like. And if I zoom out, beauty, it's a work of art. But in a local range, these are basically the areas of interest. And you can see there's pockets, right? We have a bit of a pocket over here. There is a pocket over here, right? So that makes it interesting. We have over here monthly naked point of control. It's always interesting to keep in mind. Value area low with a daily. This is just in general an important level because it's a high time frame level as well. So you can see there's different pockets which can provide areas of interest. And this is also why I don't really look for, if price moves up here, no problem, would be great for the bulls. But I don't expect this range to be broken in one go because we definitely have some stuff going on here. And it could even be interesting as a potential short opportunity depending on price approaches that particular area. But it's definitely in my plan, at least. I got my zones that I find interesting, and then I see how price gets there and what it does once we're there. So very nice. Then we have the news. We do have some news today at 6:20 p.m. Powell speaking here. I have no idea why there's no times here for Thursday and Friday this week, but generally the news here is at either 2:30 p.m. or 4 p.m. So arguably, I guess, I don't know why the times are not here, but I would guess that, that's going to be the time of the news those days, if anything. And it's Central European time zone. And then we get to the probabilities. And the probabilities are as follows, as I just reminded myself that I put it in Elite, but actually have to copy it in TradingView. So this is from the previous video. We do that. And there you go. So weekly time frame, bullish. At the moment, there's no reason to be bearish unless you get at least a 5-wave move down on the weekly, followed by a 3 up. That is when it opens the door for those type of scenarios. So we will start to at least put it in videos more and consider it. But at the moment, there's no reason to. So bullish, higher probabilities. On the daily, also bullish, looking for a flat or the WXY. On a daily time frame, just be patient, let the dust settle, right? That if price moves up back into this range, good for the bulls. If price takes out this low here, we would look for 5-wave structures to eventually end and price to turn around and still create a movement towards the upside at least. And then we'll just tag along. But on the daily time frame, this local range here doesn't really give great opportunities on that particular time frame from an Elliott Wave point of view. Now then on the 15-minute time frame, of course, you can trade any time frame. On the 50-minute, there are opportunities to be found, like over here at the 45-minute order block, which acted nicely as resistance. Of course, the push to the upside on volume here to look for an ABC towards the upside, or at least the 1, 2, 3 ABC scenario I showed earlier into that particular order block. There's definitely opportunities to be found, potentially an impulse ending, area of support. Interesting, see how price reacts there and if anything happens. So there's definitely things, and from a probability perspective, a flat on the 50-minute has higher probabilities than an impulse just because of this range here. So with the impulse, you touch the 1.618, that's not great. +2, touch the 886. It's just two things that lower the probabilities, while in a flat structure, this would be perfectly fine. That's your A, then you have your B, and this would be your wave C, which would then create a larger, you expect a larger range to continue, and then as price eventually bounces, we'll observe what happens. While in the bearish scenario, you look for another 4 and a 5. In a flat scenario, after C, you preferably get a bit of a larger bounce, and likely by this day ending, you might have some new resistance here. But that is basically it. So hopefully you found this helpful and valuable. On the left, you can see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.